On the algorithm side, the short thing is TLDR, the quants are cracked. We have a team who are just obsessed with getting users the best price. We'll look into every nook and cranny to understand, why did we not route this way? Why did we not pick up this market? Solana's on the uprise. Like, we want to get all these assets and equities like on chain. So that's kind of like where that initial spark came about.
And you have some secret sauce, the quants are quanting.
The quants are quanting.
To give the best execution. Yeah. Let's do it. Cool. Well, Andrew, thank you again for coming to Miami.
Yeah, for sure.
Appreciate you flying down and doing this podcast. I'm really looking forward to it.
Yeah.
I've done a little bit of a podcast hiatus, so I appreciate you breaking that dry spell.
Yeah. Awesome to be here. I've been a fan of your pod quite some time, and I know we were just talking about this, but like I actually discovered your podcast first while getting into like crypto, Solana specifically, to learn about those more technical topics. And it wasn't until later on when I researched you, I'm like, oh, this guy actually runs a fund as well. So kind of cool coming kind of like full circle, right?
It's very
now
cool.
Being on the pod after being a listener for, the past 2-3 years. So.
Well, I appreciate it again. And thank you for making the travels. And congratulations on the recent raise with Titan.
Thank you.
Really big news.
Yeah, 100%. So happy that the product that we built for private beta was so well received.
Yeah.
Like, to be honest, you know how they tell founders just like ship something and it's okay if everyone hates it because then you'll redo it again. I thought that was going to happen with our private beta. Like, I thought we were going to ship it and like people are just going to like hate on it. But, a lot of people just on Twitter would say, hey, this is great.
You guys got a lot of love.
And I'm happy to have, the VCs like yourself and Galaxy, as well as many others, and all the angels kind of like believe in us as well based off that private beta product. And so, just really happy all around.
Well, I think this is your first podcast. So before diving into Titan, I would love to just get a little bit background context on you and how you ultimately got to this spot. I think you have a very cool story and would love to have the world learn a little bit more about who Andrew is.
Yeah, for sure. So my career started off as a data scientist. I worked at a few hedge funds in Toronto. And there I was more focused on like the natural language processing AI side of things. And then it wasn't until like 2018, 2019, I really started to get interested in crypto. And there I transitioned working for a crypto hedge fund, but more working on the trading side. So building out trading strategies, bots, combing through data, mostly on the funding rate side. So like the carry trade that everyone was doing at that time. And during that time, it was mostly on like sexes, right? So Deribit, Binance, FTX. But I got into Solana because one of the managers said Mango Markets, like, hey, take a look at that. And I hop onto Mango Markets and I'm like, oh man, this kind of just looks like FTX, right? Like, it's kind of cool. Bought like $20 worth of Sol and was just immediately trading. And I'm like, wait, this is a blockchain that I'm trading on right now? And I'm looking at the fees, doing the calculation of Sol at the time, which was like not that much. And I'm just like, this is crazy. And that was sort of a revelation for me, that like there are blockchains that can offer this type of user experience. And immediately I was kind of hooked. And I transitioned out of that job into like my first, I guess, like on-chain crypto job where I'm really building stuff on chain. And that was at Clone Protocol, where I got my start as like a lead developer, working on their smart contracts as well as their trading infrastructure. That's kind of where I learned to chew glass on Solana.
Yeah.
But even since their protocol sunsetting, I've always been a huge Solana fan. So yeah, I guess that's sort of how I got into Solana in general. But in terms of Titan, Titan kind of came about when Chris Chung, the CEO of Titan, and I, we're old friends from one of the previous hedge funds, and we kind of got together and started thinking about kind of the strengths that we both had, right? Where I was still interested in building on Solana, and he had a background working in equities, but also working on Ethereum solvers specifically. And it just kind of came about. I'm like, there is one big player in Solana right now who's doing this type of stuff, but in my head, I think that there's a lot of room to grow. Like Solana's on the uprise. Like we want to get all these assets and equities like on chain. So that's kind of like where that initial spark came about. Whereas him and I just like literally talking in his living room, just being like, yo, I think this might be a good idea. Should we do some tests? Should we try some stuff out? And that's sort of the very origin story of like that spark that just sort of sets it all off.
So maybe wrapping some of your early experience to what it led to Titan, what did that in any way kind of inform or shape how you guys view Titan today, and why you and Chris got excited about kind of the Solana market structure?
Yeah, so back when I was working at the fund, previous to working at Clone, we did do a lot of Ethereum stuff, right? And obviously, I was tasked with investigating some Ethereum strategies as well. And sort of what led me into Solana and then even Titan was just the absurdly high cost, the barrier to entry on Ethereum. And just realizing that there's got to be something better, something different, because I already have issues onboarding people onto crypto in general. So onboarding them onto like a blockchain that charges you $10 to $20 per transaction.
I mean, my famous story is I paid $500 for a Uniswap transfer, and it was terrible because it was like 2021. I was in this leverage position and I was trying to unwind it, and it was going against me. And then it was like an extra $1,000. I'm like, got double whammied. So
Right.
it's like, yeah, this is not the future of finance.
Yeah. And with going back to that like Mango story, like that's kind of where it clicked. I'm like, I know this is what it needs to be. And kind of digging into Titan, and what we kind of see there is that I can see like what we're building on Titan. We do kind of want to bridge that gap of like all this stuff on TradFi eventually moving on to on chain onto Web3, and we want to drive Titan to kind of not only bridge that user experience, but honestly just make it better. With the stuff that we want to do on Titan, we want to make it that it's even easier to trade and get instant settlement, get access to all these different markets, all these different tokens and whatnot. So
yeah, internally we talk about kind of going from T+2 or T+1 down to like T+100 or a few hundred milliseconds as kind of the future of capital markets. And I think we're chipping away at that.
100%.
Which is the exciting part. We're starting to see, obviously you have memes and kind of the long tail of assets, but you're also seeing extremely tight spreads thanks to you guys and others. And hopefully those continue to kind of compress over time. And then instead of just the long tail of assets with memes or kind of user generated assets, you're now starting to see equities come on chain, which is super cool.
Yep.
So market structure is continuing to evolve quite a bit.
Yeah. It's super exciting. I was actually demoing my app the other day to my uncle, and basically just showing him that I think I showed him like a fart coin to like some X stock trade, and like he was just looking at it just like, what is fart coin? But I was trying to explain to him that like this is kind of where we see things leading to, where any asset can kind of be converted instantly to any asset. And at Titan, we work extraordinarily hard to get you not only access connections to these different assets, but to get you the best prices swapping through. And sort of just ties into that thesis.
So you mentioned earlier around kind of there was one gorilla in the room.
Yeah.
Why did you think, I'm assuming that's Jupiter.
Yeah.
Why did you think you guys could build a better product or a better algorithm, tighter quotes than Jupiter?
Yeah, so The to be honest, like that initial conversation I had with Chris, I was like, Chris, talk to your guys, because he was, he had friends who were also working with him on this. I was like, if you guys can get something like some initial tests going, and we can just see that we are even competitive right off the bat, like we're all in on this. So that was like the initial conversation, and just doing like, I think the initial like stuff was mostly written in TypeScript. A few optimizations. We just grabbed some block data and just like try to see what the calculations would give us. And those results were like ridiculously good. So I'm just like, okay, even if like, let's factor in the something's off, we're still doing amazing, with our algorithm and outperforming. But yeah, basically after those first tests, which only took like a couple months, like 1 or 2 months for us to get together, it was like, okay, I think guys, like, let's come together. So
was it purely on the algorithm side, or was it integrating the venues? Was it kind of a change in market structure? I guess, what was the window that you ultimately saw?
The window that we ultimately saw was like they were kind of unchallenged in the space. And don't get me wrong, like they've done great things for Solana, 100%. They stuck it through during the FTX bear collapse. So 100% kudos to them.
It was very painful.
Yeah, very, very painful.
I'm very appreciative for times like today.
Yeah, 100%. But the thing that I had in my head was like, honestly, like there shouldn't just be one player doing this, right? It keeps everyone honest. It keeps everyone competitive. If we're to push these, push forward, improve the tech, satisfy users, get more users on board, we have to have multiple teams kind of competing together to make this like the best place, right? To have internet
more
capital
competition
markets.
is good.
More competition is good, 100%. And we've even seen, us coming onto Solana. There have been people that approached us saying that we started a war or something, that like now everyone's going crazy with the meta aggregation and just improving their pricing and all that stuff.
That's great.
And I'm just like, good.
I mean, you guys were in beta until what, today?
Until, about 4 days ago.
Last week.
4 days ago. Yeah.
Yeah. So, I mean.
Yeah. So.
That's awesome.
To me, it just kind of like, it showed like the reactions that we got from Jupiter improving their stuff moving forward. It was validation basically at that point.
So maybe if we could start to kind of go into some of the kind of technical aspects, or how you guys kind of thought about the product standpoint. I really appreciate you guys have put in a lot of effort into the UI.
Yeah.
That's great. Big fan of beautiful interfaces,
Yes.
especially coming from my background in traditional
Me too,
Silicon Valley. But maybe I think all the magic sauce is kind of under the hood. And so if you could kind of talk a little bit about kind of maybe how things were done in the past and how you guys saw an opportunity to do something differently.
Yeah. So on the algorithm side, the short thing is TLDR, the quants are cracked. That's basically it. We have a team who are just obsessed with getting users the best price. We'll look into every nook and cranny to understand, why did we not route this way? Why did we not pick up this market?
So is it specifically, I mean, they're maybe backing up, Titan is ultimately connecting to a variety of liquidity sources.
Yeah.
The goal is to essentially connect to all of them, or all the high quality ones as much as possible.
Yeah.
And then route or chunk up orders to ultimately give the user the best execution possible.
Yes.
And you have some secret sauce, the quants are quanting. To give the best execution.
Yeah.
How's that kind of maybe relate to kind of how things are done today in the traditional finance stack, is with interactive brokers, or for example, maybe Robinhood and Citadel's kind of like partnership? Is it similar, like quants build models trying to get best execution, just as like a frame of reference for some of the non-technical people?
Yeah. So I think It's a little different in crypto and TradFi. I think in TradFi, it's a little more opaque how these things get done, really. Like I know with Robinhood, right? They have a deal with Citadel. I mean, I don't know too much about that exact deal or what the quants or engineers have built on top of that. So it is definitely more opaque in that sense. But you can draw some conclusions basically with what we do and what kind of I guess you'd call it your broker at that point, right? Where your broker actually goes out to these exchanges or other brokers to fetch you basically the best deal. But in terms of Titan, and you kind of described this earlier with being able to route through all the liquidity. Our algorithm's job is basically always to find you the best place to execute, and ultimately what that does for the market is it actually makes the market even more efficient, right? Where basically a lot of the times, I had a Twitter post actually the other day where I basically did an ARB on Titan, trading, I think it was like Sol to USDC back, and it was only like $12, but I made a 50 cent like return on that.
To that point, I've seen people do ARBs between like USDT and USDC, and people like make $500.
Yeah.
Which is incredible.
Yeah. And
talk about efficiencies.
Yeah, 100%. And it goes right back to the point of like why we needed competition, right? Because if you only have one DEX aggregator, it's up to them. Like they're the sole person making these markets efficient. I mean, obviously there's searchers as well, but the more people we have doing these things, the better pricing we have, and that's kind of where we see the future, where liquidity rests on chain and more liquidity will come because we know that the markets are quite efficient.
And so you guys kind of you built an initial MVP algorithm, you started connecting to these various liquidity sources. You're able to validate that you could get pretty good execution or win execution or trades the vast majority of time. And now you've started to productize that by kind of doing a pilot or beta program for some time, and now moving towards like full mainnet. And so how many liquidity sources, I guess, are you connected with today on Titan?
Oh, man. So 1 second. In terms of like protocols, I want to say last I counted was like 40-ish, but I think even just today we launched another one, the Vault, to allow you to unstake LSDs. So we're constantly adding more, and it's only up from here. Like there's only even more that we're going to integrate, but about 40 right now in terms of actual protocols, I'll call them. But in terms of the amount of like markets that we capture, it must be in the hundreds of thousands, I'd say. Of different markets.
Just like individual assets? Or
not markets? Individual assets. I'd call them, if you want to kind of frame this into like a graph theory problem, it's like the number of edges that you'd have. Like,
I see. And like traversing the tree?
Traversing that tree, yeah. So obviously it would be a massive plot. But yeah, it's like a lot to traverse through, which is like, part of, I think part of why the quants are they eat and breathe this stuff. They just love thinking about those types of problems.
So maybe diving a little bit deeper into the algorithm, is there more that you can share about kind of, again, what was done historically versus done today?
So what was done historically, I think most teams will use a class of algorithm, basically like it's a shortest paths algorithm. So I think Dijkstra's is one, A-star is one. I think the common one that a lot of people use is Bellman forward, or some sort of variation on top of Bellman forward. Our algorithm, I would say, is more of like a tailor-made problem that not only combines obviously some of those properties that these pathfinding algorithms do, but it also uses convex optimization to get even more fine-tuned. And what this does is a couple things. Number one, that the chunking liquidity problem that we've kind of mentioned before, and and other stuff. It allows us to actually get down to machine precision, basically, of finding what is the most optimal way to split your route. So a good example of this is, let's say that you are making a trade from Sol to USDC, and the route is going to go one through Meteora and another one through, let's say, Radium, for example. In the past, what you might have seen is like if they chunked it pretty heavily, they might go just 50-50, right? But then if you chunk into 1%, it might actually be 52, 48 or whatever. But for us, we can get that down to, okay, what is like Solana units, right? I think for USDC, or it's like down to the 6 decimal places. We can get down to that precision, basically. So with our algorithm, we actually have kind of solved that piece. So that's one major benefit. Another major benefit is that these pathfinding algorithms, they typically scale. I think it's the vertices and edges basically against that. But our algorithm, although it does have scaling effects similar to that, the general coefficient in front of it scales actually much better. So what that means, okay, for in practice, is that we can actually search through and touch more liquidity sources at a faster rate than others. And it kind of ties into the idea of these internet capital markets, where if we see more of these assets coming on chain, as well as more assets being created on chain, we will be the place to do it. Like our Argos algorithm would be the place to do it.
Always kind of being able to give the best execution, find the most liquid venues, and kind of parse that depending on liquidity in pools, or even some of the new, like, not dark pools, but dark AMMs, so to speak.
Yeah, you call it dark AMMs, prop AMMs.
Yep.
Yeah, 100%.
Very cool.
Yeah.
Yeah, it is very interesting. I mean, I think the thing that I love the most about you guys is just kind of the community feedback. I'll be scrolling the timeline and I'll see someone like made $100 from like a swap, where they're just like changing stables, or just saying like, I made an extra $50 or $100 on Titan.
Yeah.
To me, that's incredible, because at that point where you actually kind of naturally get people saying good things about you, that is a true spark. And it is hard in product. Most of the time people just kind of shit on you. So it's really cool to see you guys have kind of captured something here and people are really loving the product. Yeah,
100%. Like I said, with our private beta, and I know you kind of touched on this, that with the new version, we've kind of revamped the interface. That test was solely like, does anyone care that we can just give you a better price?
Yeah.
And in that you want to come to us and get a better price. And it was like that validation, because people will send us screenshots just like, oh man, like maybe I saved them 5 cents on this one trade, but like some people care about 5 cents. Like they realize that this 5 cents, they get it here. This 5 cents, they get it somewhere else, right? Like that adds up, and there's compounding effects to all of this. And there's definitely some traders who really care. But in general, right, like a lot of people, they always want the best price. Like there's Trivago and all these other products for other industries that do kind of like the similar thing.
I mean, I do think it's interesting from the trading standpoint. A lot of news, both good and bad, has kind of gone into the Robinhood saga and some of the partnerships with the market makers. But I think what's conclusively come out of those studies, and especially with some of the partnerships around Citadel, is that they're generally doing the national best bid or offer, right. Which is very interesting, because that means they're giving you literally the best execution that you could have gotten, instead of Robinhood just like directly sending your quote or liquidity on like a resting order book. And in my eyes, I do think, especially in crypto land, we have MEV, we have searchers, we have a lot of different opportunities to kind of get slightly rug pulled a little bit, like a couple bips here or 100 bips. And what makes me so excited about what you guys are ultimately building at Titan is being able to almost provide that national best bid or offer across every single asset. Because you guys are tapping into those liquidity sources, almost acting as like a broker in some sense. But by continuing to iterate on the algorithms, you're always guaranteeing the best execution. Even if your algorithm is not actually the best execution, you're showing the other prices. Yep. And I think that transparency also is very appreciative from the user standpoint, because they know Titan is most likely going to give them the best execution from their algorithm, like 80+% of the time.
Yep.
And if it's not, in those small percentage, you're still going to get the best execution. And
Yep.
so you should always come to Titan, because you're getting the best execution, period.
Yep. Yeah. Well said. Like, ultimately it was always about that, like getting the best price to the users. We've seen screenshots of people like where we didn't do too well. Needless to say, like, we're always happy for that. But we're always just like, 100% job's not finished. Like, we'll send a message in Slack, guys, this is great. Like, I love the feedback. People are loving it, but what's going on? Like, we need to make sure we're on top of this, and we're always like improving ourselves. So even at the start of like the private beta, that algorithm compared to now, although it is the same underlying guts, it's basically just been like improved every single way. And you'll continue to see more improvements on that as well, in order to ensure that we can kind of provide that, with that best bid and best offer that you talked about, sort of like that Solana best bid, best offer, making sure that we can always capture that and show that.
So you did the private beta, and now out in the public. How has that kind of been? You guys again recently announced the raise from Frictionless, from Galaxy, and a couple others. It seems like the market's very well receiving this, but how has it kind of been on internally with now being out of beta?
Yeah, so now being out of beta, the beta journey was so many learnings that we had about just everything in general, like the markets, all the tooling on Solana, with like the RPCs, like hitting those limits, improving all of our infrastructure. We've done 1.5 billion on private beta to date, which is
that's massive.
Really happy. And I think today we actually just crossed 2. So it's been really rewarding experience. I think it's like one of those like sighs of relief, like, okay, finally we're out. But it just kind of like the feedback that we got from everyone kind of like reinvigorated us that like, we need to keep going. We're getting just floods of messages, good and bad, right? And we know that like 100% the job's not finished. Like, the journey has really just started, and we've climbed this far up the mountain, but we still have a ways to go. So
speaking on that, you have built a beautiful user interface, and you have built an exceptional algorithm where people can always get best execution. Where do you see things kind of going from here? I believe you're rolling out an API. What other product things are you really focused on?
Yeah, so regarding the API, we've been asked like when API so many times during private beta. Obviously at that time we were just focused on getting to public, but our API is we're slowly rolling it out to select partners first, but expect that it's going to be more public quite soon. Definitely reach out to us on Twitter or wherever if you want access. We're more than happy to provide you with the docs and support for integrating. But aside from that, there's a lot of other work that we want to get done just this year. So we'll be rolling out limit orders very soon, probably the next couple weeks or so. And these are fully on-chain limit orders. They let you swap any asset to any asset, which is, again, kind of goes back to the ethos of what I talked about with internet capital markets, right? Like, you should be able to swap Farcoin to Microsoft, like like you could pick up the trade, right? So, we want to enable our users to do that. But we also have composable RFQ on the way as well into our routing algorithm. Basically, what that'll allow you to do is to link up with these RFQ providers who typically have their own kind of like off-chain liquidity source, right? And basically we can include that in a route. So currently on Titan, and I think most places, if you were to do RFQ, it's really just you're trading right against that RFQ provider. And typically it's a limited number of pairs that they might support. So Sol USDC, a major one that they all support. But if you were to try to do a trade like Farcoin to Microsoft, they probably wouldn't quote that for you, right? But with a composable RFQ, what might happen is we might be able to do the Farcoin to USDC, USDC to Sol, and the USDC to Sol leg would actually include an RFQ provider, and then the Sol to Microsoft trade. So that's like another way that we can actually kind of unlock that liquidity and put it, I mean, it's already in good use now, but we can, enhance it even more and provide users with better prices.
That is pretty cool. Composing the different liquidity venues, tapping into the most liquid one, and being able to ensure the best execution through the liquidity and kind of maybe a couple hops.
Yeah.
Interesting. Yeah. Very cool. Obviously Solana market structure is evolving a lot. I think a lot of people are very interested in how it continues to progress, especially with kind of new competitors like Hyperliquid. We spoke briefly about prop AMMs. You're starting to get AMMs have always kind of been early to Solana, but then you get concentrated liquidity. Order books still like a little bit hit and miss, but I do think over time we'll be able to get better order books. But until then, you kind of have these prop AMMs. How have you personally in the team seen like the market structure change, or is there anything that you would particularly like to see in the ecosystem?
In terms of change, prop AMMs were a big one, man. I think when we entered private beta, the big one that was out was SolFi and ZeroFi, and SolFi was killing it at that point in time. And I think it just goes like this innovation, I think could have only been done on like Solana or any other like high throughput chain. And basically what it allowed you to do is just kind of like create your own on-chain quoting mechanism. Like you don't have a construct of an order book. You could make one of an order book, but it's ultimately up to you to write the actual code to help you quote, to help you provide tighter spreads. And I think it was Lifinity that first started it with their kind of oracles that they updated. But I think SolFi from Ellipsis Labs, obviously crack team, they just knew how to push it to the max. And now you're seeing this evolution with like, Humidify and all these others kind of come out, and they're improving the spreads even more. And this is kind of, I haven't really seen this anywhere else. And we do see that the way, at least in my opinion, that the way things are gonna kind of evolve is that you're gonna see more of the liquid pairs and sort of have these prop AMMs like, for stables and Sol USDC. And we're gonna provide really, really tight spreads and really good prices on that, as well as be insanely capital efficient. If you've ever looked at what's actually deposited, the TVLs in these prop AMMs, it's actually not that much compared to other like AMMs, which have to have a lot more. And we see that those kind of blue chip assets are going to kind of be quoted a lot there. And then as you go down the curve, the risk curve, you're going to see it kind of have these different AMM designs, whether it's the CLMM or the vanilla, AMMs. And I do see order books still being near the top. But for those order books, I also see other designs too, like with the L2s on those. So just kind of my opinion of how this curve is going to look in terms of the assets and where they're going to be best quoted. But it's super interesting for sure. And only possible on Solana.
We're definitely seeing more of a transition from kind of the historical passive liquidity to much more active liquidity with these prop AMMs, which always kind of seemed like the future. it was cool that the AMM design allowed really anybody to kind of like spin up these pool, especially on the long tail of assets where historically you needed market makers to provide liquidity, and they don't want to provide liquidity to assets that didn't have a lot of trading volume. And so there's kind of this chicken and egg problem. But now, to your point, on the blue chips, the ones that do have pretty high trading volumes, you can spin up these prop AMMs and have extremely tight quotes. And they kind of graduate, so to speak, from these AMMs to more from passive liquidity to active liquidity.
Farcoin's actually one of them.
Really?
Surprisingly enough. Yeah, if you look on the chart, like
That's
there
crazy.
are prop AMMs that quote Farcoin.
That's nuts.
And like, I mean, like, isn't that crazy to say? It's like, yeah, like look at this pair. It's Farcoin. It's like, wait, what? Like,
so specifically on the prop AMM side, was there a unique innovation that unlocked these? You mentioned oracles that allowed them to spin up now versus why weren't they here in like a year or two in the past?
Yeah, I think the innovations. So obviously it comes from the fact that on a blockchain you can kind of design your own mechanism, maybe like your own order book, your own playground, if you will, to update these prices and quote. I think more things came about when if you look at how they update many times like per block, and their CU cost is really, really low, which means number one, not only can they get packed into blocks much easier, right? Because if your compute units are so small, it's easy to shove you in. But also it's cost effective if you're paying so little. If you go on the Block Explorer and you look at how much it takes to actually update like Humidify, for example, it's quite tiny. So those innovations really only possible, number one, on a blockchain for your own design, and then number two, on like a high throughput blockchain, because it needs to be cheap enough for you want to do it. Now, that's not to say that there are not other innovations that I know order books are trying to do, like Manifest, for example, I know has made like great improvements over some of the current designs. But when you have a really strong dev team that really knows how to optimize on that and are optimizing it for their very specific use case, right? Like, I don't think the SolFi or these other prop AMMs, their design is to appease any market maker. It's to appease them to market make. So it's like, I've custom built this thing for my engine in order to quote tightly, in order to, make money at the end of the day. And I think kind of those things all together is kind of what led into these innovations on the prop AMM side.
More frequent, smaller compute limit updates that allowed you to kind of do faster than, call it, 400 millisecond blocks.
Like you can update multiple times per block, and it's kind of
interesting,
crazy stuff.
It is cool. It's cool again to just see the market structure design change quite a bit. I mean, when I first, I think, had Anatoly on, he talked about going from like single leader to multi-leader. We're still today at single leader, but block times have kind of been more consistent, kind of going from 400 milliseconds. They talk about trying to get it to 100 milliseconds and then 20 milliseconds. How does ultimately bringing down those block times affect something that you would ultimately do with Titan? Is it just making sure the algorithms run faster, the RPCs, everything just needs to speed up?
Yeah, I mean, I think that's like the obvious thing is like more trading,
increase bandwidth, reduce latency.
Yeah, basically. IBRL, like 100%. But I do think it unlocks a few other things in my head, like, so having Alpenglow be able to confirm finality in like 100 milliseconds, they were saying
120, 150,
something like that,
100 range.
For me, it starts to make sense of like, okay, what can these like L2s now do? If you're able to like put your, like, you want to make a trade, you in 120 milliseconds, you put it onto an L2 order book, you make a trade or a couple, and then you immediately take it off. And that can happen in under a second. And then you're just like, at the end, obviously, like for us, like we're always trying to always make the best trades. But I'm just thinking at the end of the day, if it's a user making this trade and they wait 1 second just to see this happen, it like the possibilities are kind of opening up a lot. So that's something I definitely think about a lot, is like, how does this actually open up other venues for trading? How can we integrate it in what we currently have? I don't want to say too much of like it's going to be this or going to be that, because I think there's a lot of things still up in the air with how exactly this will pan out and change everything. But I do think that there's going to be kind of like a new unlock with something like this, going from the 12 second
Ethereum block time.
Yeah, finality down to 100 is whole 2 orders of magnitude.
Yeah.
It's just crazy. So
it is interesting. I'm very curious to see what happens. Right now, you start to see either these L2s or the mega ETHs of the world, even Arbitrum to some sense with like time boost. I think their Arbitrum's L2 is in Oregon, and we've started to see people co-locate next to the L2 to kind of get arbitrage on being co-located next to that. And I did a kind of deep dive with the Mega ETH team, and we kind of talked about kind of potential co-location, especially once you get block times down to 10, 15, 20 milliseconds. And it's interesting in TradFi, in like the New York Stock Exchange, I believe it's in New Jersey, and they give everybody the exact same cable length, so that when you communicate with a server, it's purely kind of model based on like the quanting side versus like latency based. But prior to that, I mean, then you get the microwave towers, then you get the custom fiber lines. And I do think the big question in my head right now is still kind of around when you go from single leader, obviously all the transactions in the world need to kind of like be propagated to that like single point. If the single leader's in New York, then all transactions, even if it's in Singapore, have to go to New York. But if you can cut down the block times even less, to call it 20 milliseconds, and then you have multi-leader, and have various leaders around the world where you have different kind of economic opportunity or economic news happening, the time to inclusion gets cut down. And to me, that gets very interesting, where can you actually do on-chain price discovery in something like a Solana of the world, versus kind of doing price discovery on a centralized venue. And to me, that is kind of one of the more interesting questions I've been thinking about a lot, is just how market structure continues to evolve on these blockchains.
Yeah, I mean, I've thought about that too. And honestly, I think it just gave me a bit of nightmares of like what I would have to do to get that
the engineering complexity.
Yes, the engineering complexity just goes up like crazy. But I mean, just kind of taking a step back from, me being an engineer working on these problems and just kind of seeing, what you just described. I think overall it's a good thing, right? Like, this is like kind of one of the ethos of crypto in general, was to decentralize, so that way not everyone is in New Jersey with a 1-foot cable.
I mean, I think it's all, but to me, it's about like fair access.
Yes.
So like you potentially can get access to the Jersey data center, but you have to pay like 10 mil.
Yeah.
But then like, even if you say you push that to the extreme with like L2s and still had the L2 model, which kind of mirrors like what they do with the New York Stock Exchange, you would still have co-location. And that's fine for people, I think, in the same jurisdiction or country. But if the data center is in Oregon, and I'm someone in Japan or Australia, and my orders are always getting the worst execution, and you're not getting the national best bidder offer, then why am I trading on that venue? And I do think more broadly what we're starting to see is kind of people care less about decentralization, especially with Hyperliquid. And that's fine. I think the focus is now even more emphasis on the product, and to making the best product possible. And so I'm excited now that the focus is on creating best products and not just like decentralization
more
for
infrastructure.
infrastructure, decentralization. Because if they're not better products, I just don't think people are going to use them.
Yeah, I think that's why Solana succeeded, actually, is because I think that the entire Solana Foundation they were focused on like what we're building is to ensure that these builders can build great products. Otherwise, our blockchain is dead, right?
Yeah.
We can, talk about decentralization and Nakamoto coefficients and, just show that on Twitter. But ultimately, if that's all you did and you didn't actually solve problems for your builders, attract the builders and get them building great products for users, you really just have some sort of religion at that point where you just think that one day this crypto will go up and it's just nonsense. So again, like another thing the reason why I built on Solana and the reason why I want to stay around and continue to stay around was because that's how Solana kind of thinks in terms of that. Build great apps, right? Like let's get more users on board and we'll build like the internet capital markets.
Yeah, I agree. I think it's an exciting feature because now you're actually getting applications with users, like substantial users, and they're now making revenues.
Yes. Yeah.
Which is, we would never mention the revenue word before in crypto. So times are changing.
No, yeah. times have changed a lot. Yeah. It's amazing to see, and like the level of competition now that we're starting to see on these teams building these apps, and it's just like night and day compared to like 3 or 4 years ago, where I think all you'd need to do is
survive.
Survive. I mean, even 3-4 years ago, like it was just like you copy their smart contract, you fork their smart contract, you put a new face to it, you launch, pay a lot of KOLs, and like that's like a new product. Whereas like now it's not only does the marketing and all that still matter, the branding, but like you need to actually execute a great product. Your product really needs to work. People want to see innovations too. They don't want to see you just like, oh, I built another thing. It's like no one cares. You need to not only build something great, but you need to sell that it's great. And I think we're entering that new phase, that new level.
To me, that is the exciting part, because I think for so long, and why even for us at Frictionless, we probably spent too much time on the infrastructure, learning the ins and outs, was to ensure that when we were investing in teams or working with teams, that the underlying infrastructure was not the bottleneck for them to make it like expressive applications. Engineers will always kind of find the limitations of the sandbox, so to speak. And I'm sure even with like compute limits or even current throughput, like whatever the max capacity is, people will push those limits. And the goal for us was really to find what theoretically had the highest limits. If you can perpetually kind of increase block size by having kind of larger or faster bandwidth, if you could go from 2 cores to 4 cores to 8 cores, 16, and continue to kind of scale with like Moore's law, to us, like that always made a lot of sense. And so I think now is a really exciting opportunity, because you actually are seeing people building much more expressive applications because the infrastructure is finally good enough. Of course, you're still going to run into those limitations, and it's always going to be a little bit of a cat and mouse game, but I'm excited now that the infrastructure is not, going back to the original starting of the conversation, $10, $15, $20, $100 on Ethereum.
So funny enough, I was I was on Ethereum the other day because I had to close something out. I had to sell something, and obviously it took a little while for it to finally confirm, but the UI had a countdown. It was like a bomb ticker. And I'm like, your confirmation time is bad when you need to show the user a countdown, so they'll actually wait to have it finish. And like just coming from Solana, and obviously optimizing the crap out of our execution, make sure it not only lands, but lands quickly.
Yeah.
Like it was just night and day. I was like, how does a person trade on this? And it just kind of goes to show what you're talking about, like, the evolution of the infrastructure. And now we're at a point where we can build great apps, and obviously the infrastructure is continuously improving, so even more is going to be possible. So yeah, it's just
I think the last I looked, Ethereum was doing still less throughput than 56K modems, which was dial-up internet. They may have increased block times. I know prices have come down because they've kind of increased them slightly over time, but still relatively rudimentary. I think Solana's still only doing like a few megabytes of like user transactions.
Yeah.
So I'm very curious to see how we go from kilobytes, or we went from kilobytes to megabytes, which was like 1,000x difference in performance. How do we go from megabytes to gigabytes, which is another 1,000x? Because I start looking around at things like the New York Stock Exchange or even high frequency trading, and these things are doing
ridiculous
many
amounts.
tens of gigabytes. Yeah. So it'd be cool to go to gigabytes and then try to get to 100 gigabytes of like user transaction. Massive throughput, but I think we're on the path to that.
Yeah, 100%. I think we're on the path to that. I think we've kind of conditioned, our infra providers to realize that they need to upgrade their nodes. And
what's the hardest part of the stack? Is it actually like the full nodes themselves, or the RPCs, or something other?
Hardest part for like the infrastructure side.
Yeah.
For us, it's definitely the RPCs. Obviously, we have great RPC providers on Solana. We work with them all. But just making sure that, you're using the software correctly. Like Geyser is one that has a bit of a learning curve. It's not super plug and play, but that stuff in my head for our business, making sure that we capture everything, making sure that we're not missing messages, making sure that we're keeping up to date with the chain is definitely in my head. Like the hardest part.
Reading the information of all the new like state updates.
Yeah. The read layer is kind of broken. It is getting better, but the read layer, it is kind of broken.
The thing that I've been thinking about a lot is essentially all venture dollars and really all kind of like raw intellect from like the researcher and like hardcore engineering has gone into scaling the rights. So like information into the chain.
Right.
And I mean, you still have Bitcoin that's relatively limited, but it's fine. It's a special snowflake.
Yeah.
Then you had Ethereum kind of be Turing complete and allow expressiveness, but still relatively few writes, like 15 TPS.
Yeah.
And then you had the graduation to Turing complete plus high throughput blockchains. Now we're calling it at like 1,000 to 2,000 writes per second. But to your point, the reads are very hard. In Instagram or like Facebook, you upload one photo to the database, so one write, and then if you have 1,000 friends, you may have 1,000 reads.
Yeah.
One write, 1,000 reads.
Yeah.
And so the thing I've been thinking a lot about is now I think we've gotten to the point where you're going to start getting a lot more intellectual capital, especially as these high throughput blockchains continue to scale the rights. Is now it's like, oh shit, like we really need to focus on the reads and high throughput reads. RPCs, but then potentially even making it like more Turing complete. And so, yeah, I'm very excited because I do think this is kind of it's to your point, improving quickly, but I think it can still do like another 1,000x.
Yeah. Yeah. I mean, honestly, the fact that we're at the problem now where it's like, okay, guys, let's scale reads. Cause like what you said, all that research going into scaling writes, I think we're doing an okay job. I think we will get to another place where we need to do that some more. Right. But let's get more institutions, more users, more trading, to come on chain. And then we'll have to deal with that problem again. I think the read layer part is more just like the apps being able to read correctly, read fast, to be able to, index the chain. It even comes down to like DevX as well, right? Like some of these interfaces, they were built like the Solana RPC kind of interface that was obviously kind of etched in stone a long time ago, and I think there's a lot of improvements that people are trying to make. I know Helios is trying to make some improvements there, which is great. But yeah, it's kind of like this ebb and flow, right? Between balancing back and forth. But I love that we're now like, okay, let's improve the reads because we seem to be doing okay on the writes. We haven't hit capacity, but let's get more users so we
it's
can
always
hit that
push
capacity.
and pull.
Yes,
Engineers are going to find edges and
exactly,
push.
exactly.
One thing though I'm very interested in now is also around kind of order flow. I think the markets, especially within blockchain contexts, historically realized that MEV and kind of the leader was a very important role. But now as applications kind of are beginning to own more of the end user relationship, they're able to generate a lot of transactions and as a byproduct, the order flow from those transactions, which can be valuable to different market makers or even for you guys, just chunking up the liquidity and kind of routing that. How do you see order flow potentially evolving on a blockchain like Solana over time?
Yeah, that's a good question. We definitely think about order flow a lot. Sort of the even discriminating between like the good order, like the smart traders, the the sophisticated ones, and the retail order flow. I do see kind of a convergence between what's happening in TradFi and what's happening on DeFi. It seems like there are players who are willing to, if they know that, hey, this is just your average GUI user, are willing to actually quote tighter for them because they, in their statistical models just realize that they put on the toxic flow tax, basically, whatever parameter that is, and they'll still come out positive EV. So I kind of see it happening like that, where prices will improve on chain because of like PFOF, like order flow. I think that does kind of go back to the importance of having like really good pricing, because we might get to a stage where there are regulators knocking at your door to make sure that like things are priced correctly. And at Titan, we believe that if we have the best pricing, we have the best algorithm to actually give the regulator the pricing on that trade. We believe that's something we can do. But yeah, that's kind of my thoughts.
How big is the team? How many quants are quanting currently?
Quants are quanting. We have 2 quants full time. We have another quant that's helping us kind of part time. They all have like PhDs in mathematics, very related fields. And the overall team size is about 13. We recently added 2 more front end devs to kind of help us push forward. And I'm really happy we're at that stage. Like, I think we're at like this perfect size to really just push, right? In all facets, not only just the algorithm, but even pushing the front end and getting these new features and all that stuff.
100%.
So, really exciting.
Let the chefs cook.
Yeah, let the chefs cook.
Maybe kind of wrapping up, how, if you could wave a magic wand or kind of envision Titan in the future, or even kind of like on-chain market structure, what is kind of your vision? I know we've kind of talked about internet capital markets. You guys obviously connecting to pretty much all liquidity sources. In Solana, you guys have created an exceptional algorithm that is guaranteeing essentially the national best bidder offer, regardless of kind of the routing or liquidity venue. How are you guys kind of thinking about kind of what the best version of Titan or kind of that future state would look like?
Yeah. So ultimately, we see on-chain trading growing like crazy, magnitudes. We see not only new tokens popping up on Solana, but also, institutions and more stocks coming on-chain. We see ourselves as being kind of like that gateway into these internet capital markets. We see ourselves being like maybe the interactive brokers of internet capital markets, where we're this one platform. You come here, you get the best prices, you get access to all these markets, all these tokens, and you are the kind of like pro trader, right? You trade a lot, you trade intraday, you will always want that extra basis point edge. And that's why you'd come to Titan, to be like, I know that I'm going to get the best price no matter what. Like, that is like what they're all about. Yeah, that would be like my ultimate vision of like how we want to be in the future, and what people come to us for.
Amazing. Cool. Well, Andrew, anything else that you feel like we didn't touch upon or you want to deep dive?
No, I thank you so much for having me. I think it's been great chatting with you. Yeah.
I appreciate it. Well, no, obviously super excited as investors in you guys, but I really think you guys are building something exceptional here. I love the community, loves it when there's no reason to love it outside of just being a great product. You guys have shipped in a phenomenal front end. Users love interacting with it, and excited to see where you guys take this. So congratulations again on the early success, but keep cooking.
Yep. Thanks so much. Thanks for having me on.
Appreciate it.